right. Well, our first guest heads BlockFi, a crypto trading and lending platform which allows users to earn interest on Bitcoin deposits. Joining us now is BlockFi CEO Zac Prince. Welcome, Zac, to the show.
Hey, thanks for having me back. How you doing?
All right. Would love to have you weigh in on what is going on in the markets this morning. That's the big question.
Yeah, I mean, look, I agree with the comments a minute ago. I think the tax rate news from the Biden proposal put a little bit of selling pressure, a little bit of a risk off mindset in people, and we've seen moves like this before in crypto, where something in traditional markets that affects a risk on trade trickles through to crypto. But I think this is ultimately going to be looked back on as a buying opportunity. There's a lot of long-term trends that are still intact, including institutional adoption and just the overall growth rate of the various networks represented in this asset class. So I don't know if you've seen my tweet from this morning yet, but I actually woke up and bought some Bitcoin this morning, and I think that that would be a smart move for anyone who's capable of doing that.
All right. And maybe you can explain a bit about crypto lending and how it operates in a volatile environment like this, and what is the value that crypto lending brings?
Yeah, so I would say overall we're promoting capital efficiency with crypto lending, and it's really the idea of having debt and credit markets for this asset class. So I'll give you a couple of examples. So from the long Bitcoin side of things, one of the things that happens is, let's say you bought Bitcoin a year ago, and it was around $10,000 to $15,000, and now it's obviously much higher than that. If you sell the Bitcoin, you have to pay taxes. It's a taxable event. Those gains are realized. Currently there's some benefits for long-term capital gains, but those might be going away. So the incentive to borrow against your Bitcoin rather than selling it might actually increase if this tax proposal gets passed. But the idea is basically that you can get liquidity without selling your cryptocurrency. And there's actually a lot of tax benefits built into our system for utilizing debt instead of selling something. So in addition to not triggering a capital gains tax event by selling your Bitcoin, you're actually also, in a lot of cases, able to use what's called the investment interest expense deduction if you take the proceeds for a loan and invest it in something else, which is a lot of what our clients at BlockFi do when they're borrowing against their crypto. So that's one big use case.
A lot of people use BlockFi as well to earn interest on their Bitcoin deposits. So last month, CoinDesk reported that BlockFi was cutting the interest rates paid on large-scale Bitcoin deposits. Is that because there's too much people submitting their Bitcoin looking for yield and not enough big traders who are borrowing Bitcoin? So there's more Bitcoin supply with lenders than demand?
Yeah, I mean, ultimately, we're a sort of slow market maker for debt and credit markets, and the rates that we're able to offer our clients on BlockFi are as high as they possibly can be in terms of what the market will support. And over the past 6 months, we've seen the market position increasingly bullish, and generally when the market is positioned bullish, there's a greater demand to borrow dollars and a lower demand to borrow Bitcoin. Additionally, there's been an increase in adoption of interest accounts and folks getting comfortable with the risks that are associated with earning a yield on their Bitcoin and deciding that they want to participate and earn some of that yield. And so, we try to change rates pretty slowly at BlockFi. It's very different than, maybe a DeFi platform where the rates, change in real time. And we've made a commitment that rates on our platform won't change more than once a month. Actually, the last time we changed rates on Bitcoin was in April of last year when we increased them coming out of the big drawdown in March of 21.
Zac, how does a downturn like today affect what you do? How does it affect your business?
Yeah, ultimately, a lot of the crypto borrowing demand comes from market making and trading firms, and the opportunities that are available to them that they're looking to capitalize on increase when markets are volatile. So directionally speaking, bearish sentiment or market volatility would increase borrowing demand for crypto. Bullish sentiment would increase demand for borrowing dollars secured by crypto.
So now for those who are trying to withdraw Your terms and conditions say that BlockFi can halt the transfers and withdrawals during a volatile market. Is that what we're in right now? Are we in that kind of a market yet?
Yeah, so there's in general there's a big difference in terms of what operationally happens at BlockFi and what our legal terms and conditions say, which are kind of written by lawyers and built to be as conservative and protective for the company as possible. We have never utilized the ability that we have in the terms and conditions to process withdrawals at up to a 7-day window. Actually, operationally, throughout the entirety of the interest account, we process withdrawals within 1 business day, which is our standard processing window. And we're doing the same thing now. In this level of volatility, like in the world of crypto volatility, this is not particularly extreme. We're within 1 standard deviation of normal market volatility right now. You have to get to the 25-30% range before you get out to 2 standard deviations, and so this is just another day.
So a 2 sigma event or
another day in crypto. Good morning. So you recently brought on former FTC Christian Carlo, and this is part of like a larger trend where we're seeing kind of these former regulators get more directly into the industry. But I'd like to talk specifically about the regulatory risks that you believe that you face. First of all, who regulates you, and what are some of the specific risks that could come from the regulatory side on your business?
Yeah, sure. So BlockFi is regulated in a similar way to fintech companies today. And what that means is that we have a kind of a mishmash of federal and state regulations that apply to our business. So at the federal level, we're an MSB, money services business. And then at the state level, we hold lending licenses and money transmission licenses, depending on the state. In terms of the risks, I think that crypto is still something that is having certain regulatory components be worked out. There's a lot more clarity today than there was, 3 years ago when we were the first company in the world to get lending licenses in the U.S. to make loans to folks secured by their crypto. But there's still a lot of things that need to get figured out. And for companies like BlockFi, there's kind of this long-standing challenge that we also have, which is the same challenge that fintech companies have, which is basically that there's not too many good ways to be cohesively regulated at the federal level. And as a result, what you're left with is working at the state level. And that can be relatively burdensome because you're doing things 50 times instead of 1 time. And also there's some intricacies within some of the different state laws, in particular New York for the crypto industry. But I think that the macro direction of regulation for crypto is moving in a great direction. And ultimately, despite the challenges that come with the U.S. regulatory environment, I think that we've generally been on the right side of enabling technological developments. And I think we'll get it right with crypto over time.
Zac, so as Emily mentioned, we had Christian Carlo, a former top commodities regulator, on the show. He headed the CFTC. Some would say that this is a sign, you're stacking your board with top regulators with big names. Some would say that this is a sign that you may be considering going public. Is that the case?
Yeah, I mean, look, we haven't been shy about saying that we are interested in being a publicly traded company, and that's definitely something that we continue to work on. And in terms of our board composition, we think that part of that process of just company development, we're very large now, over 600 people around the world, managing tens of billions of dollars of assets on our platform and supporting hundreds of thousands of clients, comes with an increased focus on corporate governance and corporate structures. We recently completed our $350 million Series D round of funding. And so it's just a natural cycle of company maturation, and having the opportunity to work with someone that has such a distinguished professional background as Christian Carlo, both in the private sector and the public sector, is a really exciting opportunity for us.
Zach, we're seeing the likes of Maker get into real estate lending. Is that something you guys are looking to do to borrow, lend against hard assets?
It's not something that's on our near-term pipeline. I think what you're more likely to see from BlockFi on that front would be a partnership with specialized firms that focus on providing mortgages to high net worth individuals that either have concentrated asset positions or they're not a U.S. citizen but they're looking to buy U.S. real estate, and facilitating a connection to the right places for our clients where you can work with someone that will actually prescribe value to your cryptocurrency holdings, and BlockFi can represent the value of those assets through the statements that we provide and information about your account, versus us actually becoming an originator of mortgages ourselves.
All right, Zach, thanks so much for the update on BlockFi and appreciate your insights.
Thanks for having me. Great to see y'all.